Hey guys, Taylor with GammaEdge here, coming at you with a post-market review for April 25th, 2025. Yesterday was, a nice continuation from the high from the bulls after, a constructive move on Thursday. Net strong week in the market from the bulls. Let's get into the pre-market prep and then our intraday tools specific to Friday's price action. And again, just going to move through the pre-market prep quickly. I want to focus this on price action intraday tools. But again, we post our pre-market prep every day on YouTube, so you can watch that video as well. Quickly looking at the market trend model, constructive day on Tuesday, a little bit of regression on Wednesday, constructive follow through, which is exactly what we wanted to see on Thursday. So strictly from this view alone, we were biased higher rather than lower, because that's what the signal is saying, right? However, we also wanted to say just the market environment that we're in is still, relatively high volatility, can be news or tweet driven. So risk management, as with always, is very paramount in the markets right now. But net, everything else in a vacuum, this is a very constructive market trend model in the short term. Next, going through the SPX options complex. The reason we do this is, again, options market are inherently forward-looking. B, SPX is the largest, most liquid options market, and so understanding this can give you good insight into understanding the general market and what their expectations are. So SPXA, remember SPX has SPXA, SPXP. SPXA is the larger of the two. It's like your cruise ship. These are your monthly and your quarterly expirations, which are shown here. So just going through this, below spot price, call dominated, good to see. Above spot price, mixed between call and put dominated. This is improving from what we did see last week. However, there is still a lot more improvement that can be done in a kind of healthy bullish market where we see, continuation higher. This is green up and down the structure. So there's certainly improvement that to be made, but there has improvement already been made. I know I just said improvement a lot there, but hopefully that is clear. And then that brings us to SPXP next. Here you can see kind of the stark contrast, I want to say, but there's just a lot more green in the structure. And so that takeaway here is just calls are a lot more present, which is exactly what we see in our market turning framework. Market trend model moves higher, which we saw. SPXP then turns and becomes call dominated, and then that trickles into SPXA, right? SPXP is smaller. You can see total OI here is 4 million versus the SPXA, I think, was 12 or 15 million. This is your daily, your weekly, your 0DT expiration. So the nature of trader is going to be a lot more short-term in nature. So again, it's natural that this structure is going to turn over before the SPXA. But it's constructive to see that this is primarily call dominated and the SPXA is starting to follow as well. So between market trend model, SPXA, SPXP, the market is generally looking more constructive. And so coming into the day, the bias is sideways to higher. And the first thing that we'd be looking at for kind of signs of deterioration is back to the market trend model, where we would see a rollover. We'd see filter tick selling, which is large, significant, persistent selling. Which, newsflash, you're watching this on Saturday. We didn't see that yesterday, we didn't see that in the market on yesterday. Lastly, here, just looking at SPX 0DTE complex, things we wanted to highlight for you. The purple right here, this is the expected move. That's just based off the options market. Just looking at the money straddle, or that's one way that you can do it, right? Then we have our drunken sailor range. The top side was 55.50, given that the presence of the iron condor that was in the structure. We also have those legs highlighted for you as well, 55.45, 55.50, and 54.10, 54.05. On Thursday's market, that upper side of the iron condor, there was some good price interactions before we ultimately broke through it. So it's just important that we have that zone highlighted, because we oftentimes do see interaction with this. But again, the thing to note is we are above the top of the DAX transition zone, which is constructive to see. That was at 54.15. And so all of this, call dominated, but we're still within the context of the drunken sailor zone. So what we need to see here is a continuation of intraday, our volume analysis, and making sure that there's kind of intraday activity moving higher, call speculation higher, market trend model trending higher as well. And that gets us to price action today. So what we do is we have highlighted for you that the top side of the iron condor, bottom side of the iron condor. What we have highlighted here is 5,500. That's just a key level in the structure. It's also a key psychological level. So we always have those indicated, just because, especially the nature of the markets the last couple of months, Those whole and half levels have been kind of key reference points for the market. And so right on the day, net higher, looking at the market trend model real quick, we can see, just a persistence of the trend higher. We had a little bit of filter tick buying. The one thing I did want to note is, in the morning, we did see some weakness in price action here, right there. However, when looking at the market trend model, we didn't see that coming through at all. In our volume trend analysis, we'll get to in a minute, didn't see that coming in at all. No filter tick selling. So that's what kind of told us. Remember, coming into the day, market trend model was moving higher. The structures in general looked more constructive than not. So weren't super interested going short. Now keep in mind, there's valid reasons to be getting tactically short on an intraday basis, but I just wasn't a fan of that, just given, just kind of a large range, still within the range of prior day, and the market trend model is really not reacting to this downside move at all. And so for there, just ending the video today, looking at our intraday volume analysis. If you're not familiar with this, SPX 0DT volume, that's where 40 to 75% of a given day's volume transact is in the 0DT. When we're talking about the SPX complex, that is, what we do is on a 5-minute basis, we aggregate the call and put volume, we figure out the distribution, we find the middle points of those distribution, which is called a centroid, and then we plot that. So every 5 minutes, we plot, we connect the lines. The green solid is calls. The red solid is puts, and by plotting those centroids, we can understand what the behavior of speculators above those spot prices throughout the session. So at any point in time, say from the open to noon, we can understand what the call speculators have been. We can understand what the put speculators' behavior has been. And all things equal, we can project out what the likely path of those centroids are throughout the rest of the session. The assumption there is all things remain equal. And right in price follows where the centroids head. So it makes it very good, not only for kind of understanding what the likely path of price is, but also understanding what the character of price action up until that point is. Is it choppy, kind of like it was today, or is it trending higher, which would look like this, or is it trending lower? So on days like this signature is powerful because we kind of have a fairly flat call centroid, but the put centroid is ramping higher. So when the put centroid is ramping higher, that kind of tells us that, okay, kind of like a waterfall move lower is not likely because we are not seeing that out of the money put speculation trending lower. It's trending higher. So one way that we can be suggestive about this, right, because volume alone doesn't tell you if it's opening or closing of transactions, but when we see a steady move like this, this generally tells us, puts are being closed as opposed to puts being open. So that's why we kind of see just that persistent kind of gradual movement in price higher throughout the session, because puts are being closed, but calls are not, aggressively being opened above spot price, which is why we didn't really get, a massive ramp higher. Don't get me wrong, it was a decent move higher today, but as you can see, that the nature of it was still just kind of fairly choppy. The other thing I want to note is, what we specifically were talking about in the Discord. We had a message around 1:20 p.m. And what we were talking about here, again, this is just kind of the utility of the market trend model as well, or not the market trend model, but our intraday volume analysis is this is 1 o'clock. What we can see at 1 o'clock, or at least understand, is the behavior of the call centroids at this point and the put centroids. And again, this is how we project out what the likely path of the centroids are through the close, right? We can understand kind of what price action, the character of price action to that date. So again, call centroids were fairly flat to lower, put centroid was higher, right? And something else we wanted to note here too is something that we call the 50 delta area. And what that effectively means is throughout all of this market time that happened, from the open to 12:30 or whatever, these calls were transacting. Once price starts to get up into this area where this blue line I drew is, this is called the 50 delta line. So what that means is, when all these calls were being put on, presuming that they were put on when price was down here, they were out of the money. Now as price is starting to trend higher, we start to get up to this area. We're now into the 50 delta area where those calls that were out of the money are now at the money or even in the money. So there's been massive contract appreciation in those levels. And we see this time and time again where this is just a natural area of monetization, right? So we were telling everyone, hey, pretty nice move up higher. We're starting to get to that 50 delta area. You should be cognizant as this is kind of a natural place to take profits. I specifically called out in the Discord, hey, taking some profits up here. As you know, kind of the target on the day was at 55.45, 55.50. And so relative to kind of the level of risk at 5,500, risk to reward was kind of getting 1-to-1. So the dynamic R was shifting in the trade. So it just made sense to lock a little bit in here. And then, kind of once we got into this area, that's where we saw that, kill bar lower on the news or whatever. And as we were telling people, like, no idea that was going to happen. Anyone that could predict that, probably had inside information. Like I had no way of telling that from the data. But what I do have is understanding what structure was for the day and just understanding we were coming up into this level and why it made sense to lock in some profits there. And then again, just recapping the day, something else that I like to pay attention to, this isn't really a GammaEdge thing, is the opening print, which is this blue line. Time and time again, if you watch these videos, you can see how price on an intraday basis loves to interact with this opening print. Kind of a good gauge for you of, kind of bullish above the opening print or bearish below the opening print. And so right again, we just saw a lot of good price appreciation, price consolidation around the opening print in the morning session. Again, was not super interested in going short, just given the market trend model was not suggesting downside. Our intraday volume analysis was not suggesting downside. So we were looking, or at least I was looking for a breakthrough higher of the opening print. But again, the target for the day was up here at 55.50, which was the top of the iron condor. And so we did get an entry somewhere around here. Again, held it nicely up to the 55.25. Then we got that large spike lower. Couldn't predict this, but again, we just talked about the 55.25 significance of that level being the 50 delta area. And then, yeah, you can just see respect of the opening print again there, then, traded back up to that 50 delta area. So hopefully you can see kind of the power of the levels that we come up with and then the tools that we use to develop those levels. And then this white thing is VWAP. I know a lot of people like pay attention to VWAP. That was trending higher throughout the session. Price was above that for the session. So, from an intraday trading point of view, looking to try and get long on pullbacks, or if you're a credit spread trader, kind of understanding that, hey, we're likely not going lower on the day. So selling stuff below spot, below the market, below our centroids, all that good stuff should have hopefully now makes sense and kind of understand what the utility of the tools are. So with that, you guys have a great rest of your weekend, and we'll talk to you Monday. Thanks. Bye.